Welcome back to Black Cat Crypto Club. I know in the last video, I was a bit, all doom and gloom. And, unfortunately, I can't say differently about this video, but there are some positives in this video. And overall, I think you'll see that this video, how Bitcoin is really the hope and will ultimately protect you from the things discussed in this video. I've also been kind of wanting to make this video for a while because we're at that point in the cycle where prices are going up, people are making money, and fraud and scammers are coming out of the woodwork. Just last week alone, I received several scams in my emails, and even a pretty clever one in one of my hot wallets that I use on a regular basis. Now, one of the emails was a kind of a blackmail type of email that was basically, it was very vague in what they were accusing me of. They just said that they had seen what I was doing online, and they actually kind of scarily provided me with an old address of mine, like physical home address. And they said that if I did not send them Bitcoin, certain amount of Bitcoin, that they would show up at my house and expose me for this supposed thing, again, being very vague on what I had done. That was so shameful that they were blackmailing me. And ultimately, I knew it was complete crap because one, I haven't done anything that I'm ashamed of. So, but it was kind of scary. These scammers, they'll find records of where you live and things like this. I think this actually kind of stemmed back to Ledger. The Ledger wallet that I have, and the hack that Ledger went through and lost a bunch of their users' information, because that's where I was living when I first got that Ledger. So again, guys, be careful, who you're giving your information to, for one. Now, the next email that I got was much less clever. But again, they were requesting that I send them Bitcoin, and it was obviously written by somebody who didn't really grasp the English language very well. But they were throwing in a lot of, clickbaity words like female, this and that. But they, were asking you to send Bitcoin. And the third email that I got kind of made me laugh a bit because it said that I had been sent $1,000 via Cash App. Now, this might not be as crypto related, but still, they were saying I had $1,000 that was sent to me on Cash App, but it was only available if I provided confirmation of my credentials. And then at the bottom, it kind of stated that it was an email sent by a trusted sender. Guys, do not fall for these kinds of scams. You should never be giving out your information, even if Cash App or your bank or anybody is reaching out to you. They won't ask for your personal information, your passwords and your login information to their institutions. So just again, guys, we're at this part of the cycle where this really becomes important. Now, the last scam attempt that I received last week came in the form of a token airdrop to one of my crypto wallets. Now, the token that was dropped into my wallet was called ETH Games, ETH Games. And when I looked into my wallet, I had been dropped 800 and some odd $1,000 worth of ETH Games token. So right away, that was a signal that this was a scam. I look into my wallet and I have like $800,000 more than I had yesterday. So I instantly got into my wallet to manage my tokens and completely shut that token off. I don't want to see it. I don't want to touch it. I don't want to interact with it in any way. Now, that said, there are a lot of legitimate airdrops out there. But guys, if you see a token in your wallet that you don't recognize and you really, you've just got to do your due diligence and find out what the token is, if it's actually a legit thing and why it was sent to you. I get a lot of airdrops from actual airdrops that I take part in, as well as a lot of airdrops that come to me because I've ordered the Solana Seeker phone. I've completely paid off that phone just from the airdrops that they send me because I ordered that phone. But every single time I get an airdrop, I search for it online. I do my own due diligence to find out why I received that coin and if it's an actual legitimate airdrop. So all of that said, when you are in crypto, you always really need to be vigilant about your security practices, everything. But with where we're at in the crypto cycle right now, guys, you really need to be aware that there are a lot of scams just coming out of the woodwork, like I said. Now, one of the ways that you can protect yourself is to self-custody. That is really the focus of this video, and you'll see why, guys. There's a lot to go into today, so stick around. This is really probably one of the more important videos that I have made. But at that point, you need to really understand that there are a lot of social hackers. So once you get self-custodied, you need to understand that there are people like my emails that will try and socially hack you. And they'll try and get you to send them crypto or to give them your seed phrase for your wallet, which you should never, ever do. Again, guys, just same as your bank login. Never give out your seed phrase to anyone. I get weird, and I don't want my dogs seeing my seed phrases sometimes. Also, pertaining to my last video and the warning signs that I've been seeing from the Trump administration, especially concerning deregulation, self-custody becomes more important than ever with this kind of thing. So if you're wondering, what you can do to not only protect yourself, but also safeguard Bitcoin and crypto in its entirety, self-custody is, in my opinion, the single most important thing you can do. And we're going to get into all of that, guys, throughout this entire video. But before we really jump into the content, guys, I want to jump over here to Chicken Butt Microsanctuary. Where are we at here? Chicken Butt Microsanctuary, guys. These guys are the small sanctuary, microsanctuary, that I've really been trying to shine a light on and get people to help these guys out. Any small amount, guys, again, really goes to help these guys out. They've got PayPal, as you can see here, Venmo, and they've got Patreon, where you can go, and all very good ways that you can help support them. You can also see here that they are a registered 501c nonprofit. So anything you donate to these guys also helps you out when it comes tax time. And if this year, the third year of the crypto cycle, plays out like it always has, guys, you are going to need as many tax write-offs as possible. So go over and help these guys out. Again, any small amount really helps these guys out. Always appreciated on my end. Okay, so let's get into things. So for the last while, I've been raising, red flags that I've been seeing, alarm bells that have been kind of going off in my head about the new administration's deregulation of everything crypto. It just seemed, a month ago, everything we were seeing, all of the Trump appointees, everything was in favor of crypto, and it just set off alarm bells in my head. I've really been about the only one that I've seen. Everybody else that I watch or I'm reading are still kind of just over the moon about everything that's happening, without any caution to things that could be, things that we need to be aware of. So I've really kind of been the only one that I've seen has been kind of speaking out about this. But I did find another big YouTube source that I watch every once in a while, that this guy is primarily very bullish on the prospects of Bitcoin. But he has also started raising a lot of the same flags. And that is Dante Cook over at Simply Bitcoin. So I do want to just show you guys a quick 3-minute clip of one of his latest videos. And I think he makes some really good points.
Late last week, the SEC repealed Staff Accounting Bulletin number 121, or SAB 121. This is one of the most important regulatory shifts in the history of Bitcoin. On the surface, this is absolutely a win for Bitcoin adoption and Bitcoin's price, which is essentially unlimited at this point.
Day one, SAB 121 is going away, and that is a major catalyst for Bitcoin. I think that Bitcoin can probably get to 500,000 on its own without SAB 121 going away, but it's SAB 121 going away that really makes the upside unlimited.
This is coming from Eric Weiss, the person who orange-pilled Michael Saylor himself. I see the rewards, but I also see the risk. I was 18 when the great financial crisis happened in 2008. Bailouts, bank runs, and a massive loss of trust. And from this collapse, Bitcoin was born. But imagine if all of this was amplified by a currency that can't be printed out of thin air. Welcome to the brave new world post-SAB 121. With SAB 121's repeal, we're on a collision course between Bitcoin's principles and the flaws of the traditional banking system. The rewards will be magnified, but so will the risks, unless you do one simple thing. I'll be the first one to take sides with Parker Lewis on this. Gary Gensler might have been right. Of course, he was wrong about Bitcoin, but he might have been right that there should be guardrails and safety in place for crypto being custodied by banks. We're bringing the challenges and issues and flaws of our current system with rehypothecation and merging it with the principles of unforgeability and limited supply in Bitcoin. Rehypothecation is like lending your house out to 10 different people. It works until everybody shows up with a moving truck. And with Bitcoin's fixed supply, there's no central bank to print any more money if things go south. FTX, BlockFi, Genesis all brought down with rehypothecation and under-collateralized loans. Now, imagine that same behavior being tied up with the too-big-to-fail banks. This isn't just a crypto problem where you remove the logo off of an arena. This poses systematic risk. This is nothing new. This has been happening since the creation of central banks. One of the ways that you can prevent yourself from being rug pulled in the eventual collapse of a bank run with the repeal of SAB 121 and them lending against your Bitcoin is by removing your Bitcoin from exchanges by taking self-custody. Without the proper conversation, collaboration, rules, and protocols in place, Preston Pish believes that we're heading for a crisis, and I agree with him. In this article on Ego Death Capital's website, he lays out some things for Congress to consider. Banning the rehypothecation of Bitcoin, requiring that banks segregate customer assets. Pretty good idea. Enforcing proof of reserve audits. Having regulatory coordination in place. And here's my favorite. preventing the sale of a strategic Bitcoin reserve in order to bail out banks. It would be a sad and ultimate irony if Bitcoin, which had in its genesis block, Chancellor on the brink of second bailout for banks. If that ended up being the thing to bail out the banks, this would be the ultimate reversal in purpose of Bitcoin itself. But with the SAB 121 being repealed and added to this list, let's be careful to understand the risks involved with the potential rewards. This can all be mitigated if you take some time to study and the effort and have the wisdom to take self-custody of your Bitcoin. I can't emphasize it enough. Not your keys, not your coins.
So as you can see with Dante there, his concern is mainly with SAB 121 deregulation, which he said right in the beginning that it is a positive thing for the crypto space, as I have said as well. But there are major concerns if there's absolutely no oversight or regulation at all. It's really strange that I actually stumbled upon this video because it was just yesterday that I was continuing my thinking on where all of this deregulation could lead us. And I came up with really about 3 areas in my mind which deregulation could cause major issues. The first being the banks and collateralized crypto loans, like Dante has pointed out in that clip. Now, if you've watched my show for long enough, you know that I've done a video on the collateralization of your Bitcoin as a way of never having to sell your Bitcoin. You can basically live on your Bitcoin if you have enough and never have to sell. But in that video, way back when, I really stressed the importance of knowing what you were doing. And now with the collateralization of Bitcoin loans from your banks on the near horizon, if you are planning on taking loans against your Bitcoin and crypto, you really need to know what you're doing and look into the specifics of that lending institution. Things like Dante pointed out in that video. Whether or not your lending institution has the ability to rehypothecate your collateral. If they can take your collateral, take possession of it, and do other things with it, that's where a lot of fraud happens. Whether or not they provide proof of reserves. So if they are holding your Bitcoin in collateralization, can they prove that? And whether they separate all of their customers' funds, all of their customers' assets from not only their assets, their own assets as a bank, as well as other customers' assets. If there's commingling going on, also another big way. I mean, this was a big area in which FTX got in trouble. So ideally, your Bitcoin for a loan, if you're collateralizing your Bitcoin for a loan, the best, most ideal situation would not require you to give up your custody of your assets. This would be something really along the lines of how home mortgages work, where you still are in possession of your home, but you put it up and you kind of agree that if you default on that loan, the bank has a legal right to your home eventually. But if an institution is requiring that you absolutely have to give up your custody and send over your Bitcoin in order to take a loan against it, the bare minimum, guys, the bare minimum should be that they provide proof of reserves of your assets, that they are actually continuing to hold your assets. Otherwise, like I said, they can literally do just about anything with your Bitcoin, with your crypto. And that's just how a lot of fraud happens. Now, the second area that I kind of identified when I was coming up with these three areas is obviously centralized exchanges. We've already seen with FTX what happens to Bitcoin and the entire crypto space when a centralized exchange does not have the proper regulation and oversight and ends up going bust. Horrible thing to go through. But again, as stated, a way that you can help protect against this is by removing your assets from centralized exchanges and moving them to self-custody. Absolutely one of the greatest things you can do for yourself and for the entire crypto space. Everybody involved in it. Now, finally, the third area that I think could be a big concern is with ETF providers. There's been a lot of people that have been very wary about these ETF providers. Now, you might remember that I did address some of those concerns in the past. That ETF providers could possibly not hold as much Bitcoin as they're claiming what they should own, in fact, on behalf of their customers. And essentially when they do that, they kind of make what's commonly referred to as paper Bitcoin. It's the same thing with gold. If somebody doesn't hold the underlying asset, they kind of make a paper version, just it's Bitcoin or it's gold on paper, but it's not backed up by the actual asset. And if they do that, they could be doing other, albeit fraudulent things with their customers' funds. Now, when I addressed this in the past, I explained that I was very skeptical that this was actually happening. And the main reason for that skepticism was that Gary Gensler and the SEC were so anti-Bitcoin and crypto that I really didn't see any of the ETF providers really pushing their luck in that regard. But with Gary gone now, and we have a new crypto-friendly SEC in place, now things have changed. Now, again, hopefully this isn't the case. But if the SEC were to somehow signal to the ETF providers that they weren't going to be doing as many or any audits of them and their Bitcoin holdings, this could lead to a large amount of fraud and potential collapse in that system. And again, once again, how you can prevent this is by self-custody. I really believe that no one should be buying these ETFs at this point outside of possibly holding their 401k, their IRA, and their retirement in these Bitcoin ETFs. And if you're one of those people that has your 401k or retirement savings in these Bitcoin ETFs, you're a bit stuck with that unless you plan on taking a massive hit by cashing out of your 401k early. Guys, but if you are one of these people that have invested your 401k into the Bitcoin ETFs, the least you can do to help yourself and to help contain any kind of risk on behalf of these ETF providers is you can look into what it entails to move those funds from your ETF provider into a different ETF provider who does have proof of reserve. Now, guys, at this point, the only Bitcoin ETFs that are providing proof of reserve at this point are ARC21 and Bitwise. So 2 out of the 9 Bitcoin ETFs are providing proof of reserves. That's pretty lousy. So, you know, if you do have, again, if you have any amount of money in these Bitcoin ETFs, I would highly recommend looking into what it would take to move that allocation to either ARC21 or Bitwise. Just for the simple fact that you know for an absolute fact that they are holding the amount of Bitcoin that they should be. They're transparent about it. Now, really quickly, there is some positive news here, guys, because I believe it was iShares. I don't know, one of the ETFs, I think it was BlackRock and iShares, have just filed an amendment to their Bitcoin ETF, and they want to be able to be in-kind settlement. So what that means, guys, right now, the only way Gary Gensler and the SEC were approving these ETFs is if it was a cash-only settlement. So basically, you have to pay cash to buy these ETFs, and when you sell, you get cash back, right? So with in-kind redemption, what this would mean, I believe, unless there's something else going on here, is if you have the ETF, you would have an option once you decide to sell that to cash out in Bitcoin. Now, this is positive news, guys, because that in and of itself would help mitigate that risk, because BlackRock or whoever the ETF provider may be would know that they need to have that Bitcoin on hand, right? So, you know, unless there's something in the fine print that I'm not seeing where, you know, it's a in-kind redemption kind of thing where we'll take your Bitcoin, but we're only paying out once you decide to sell. We're only paying out in cash. If that's in the fine print somewhere in this application, and I don't think that's the case, but if it is, that would be pretty horrible as well. So I don't think that's the case. I think in-kind redemption implies that you can cash out in that kind, in the underlying assets. So out of all of this doom and gloom in this video, guys, that is a ray of hope as far as the Bitcoin ETFs go. Now, we know that the past 4 years of the Biden administration, Gary Gensler's SEC, Elizabeth Warren and the anti-crypto army, and several other government agencies, you know, actions have been absolutely disastrous for the entire crypto industry. But now more and more, it is appearing that the pendulum is swinging from that hard, stifling environment completely the opposite way, far past what a normal regulative thing would be. The pendulum is swinging so far back the other direction that we are likely not going to have the proper oversight from these centralized institutions. And you can see this in a lot of the talk and the verbiage from this new administration. And the key verbiage is, you know, that they're using is deregulation, deregulation, deregulation. We want a move away from that Gensler, Biden, anti-crypto army regulation by enforcement. We definitely want to get away from that. And we want proper, the key word is proper oversight of everyone on the traditional finance side of crypto. We want oversight of the banks. We want oversight of the ETF providers. We want oversight of potential, fraud coins that are coming on the market, meme coins, rug pulls. We want oversight of all of that. But, we have Trump, who in his speech to the WEF himself claimed that he was bragging that he was going to be the biggest deregulator of all time. And we have a lot of others, in the new administration touting deregulation. Here's a clip, guys. I want to show you this clip from the new Treasury Secretary, Scott Bessent, talking about growing our way out of our debt, the national debt, via deregulation. Listen to this.
I do believe this election, there's a big choice, and we are going to decide whether we are going to grow our way out of this debt burden. And I think we can through deregulation, energy independence and dominance in the U.S., and a growth mindset. We can get back to growth. I feel very strongly that this is the last chance to grow our way out of this.
Now, over the last several weeks, as these deregulation alarms have been going off in my head, I've often compared this to the savings and loan scandal in the 1980s. So I just want to read you guys kind of an overview of what happened during the savings and loan scandal. So I've got this on my phone. It says the savings and loan scandal primarily occurred in the 1980s and early 1990s, was one of the largest financial crises in U.S. history. It involved the failure of over 1,000 savings and loan associations, which are financial institutions that primarily focused on offering savings accounts and providing home loans. Here's an overview of the key events and causes. 1. Deregulation in the 1980s. Relaxed rules in the late 70s and early 80s. U.S. lawmakers deregulated the S&L industry, allowing these institutions to engage in riskier activities like commercial real estate and speculative investments. Now, if this doesn't sound familiar, guys, as you've probably heard before, you've heard me speak about it on this channel for sure. The banks in 2023, a big part of why we saw a bunch of banks failing, and we saw pretty much the entire banking industry struggling before the Fed and the Treasury stepped in to essentially bail them out, was that banks were overexposed to commercial real estate. So another tie back to history there. Okay, number 2, the economic challenges, high interest rates. During the late 70s and 1980s, the Federal Reserve raised interest rates to combat inflation. This caused S&Ls, which were locked into low interest, long-term loans, to face significant losses when their funding costs increased. Again, this is exactly what happened in 2023, just about a year ago. This is why the banks started failing. Real estate downturn. Many S&Ls provided heavily or invested heavily into commercial real estate, and a market collapse in the 1980s led to widespread defaults. Okay, 3, fraud and mismanagement, lax oversight, deregulation, combined with weak regulatory enforcement, created an environment ripe with fraud and mismanagement. Insider abuse. Some executives used S&Ls as personal piggy banks, engaging in fraudulent activities like issuing bad loans to friends or speculative projects. Now, guys, that is a big tie. Hopefully we don't see this with the crypto industry, but that is, you could almost just say the same thing about the 2008 housing crisis, right? They were writing bad loans. Poor decision-making. Inexperienced management often invested in highly speculative ventures such as casinos and hotels that failed to generate returns. And all I've got to say about that part is we have right now a Dogecoin. If you want to talk casinos, we have a Dogecoin ETF that was just filed a few days ago. So sounds similar, right? 4, federal insurance and bailouts. The FSLIC insolvency. Savings and loans were insured by the Federal Savings and Loan Insurance Corporation, FSLIC, but the massive number of failures drained its reserves. So guys, even if something says it's insured, if your loan is insured, if your money in the bank is insured by the FDIC, really, you know what that amounts to? It's basically traditional finance's version of trust me, bro. All right. So careful whenever you're seeing people try to pressure you or convince you into something because it's insured. Taxpayer bailout. The government stepped in with the Financial Institutions Reform, Recovery, and Enforcement Act in 1989, which abolished the FSLIC and created a new regulatory body, and taxpayers ultimately shouldered the bailout costs, which totaled approximately, and this was from 1980s, guys, not adjusted for inflation, anything. It cost taxpayers $160 billion. Guys, that over the last few years when we've been going through this FTX thing, the media portrayed FTX as the biggest scandal, the biggest fraud case in all of American history. That was $19 billion. The savings and loan was nearly pushing 10 times what FTX was. But we won't talk about that because primarily that was the government's fault. 5, long-term impact. Industry overhaul. The scandal led to stricter regulations on financial institutions and significant reforms in the banking sector. Prosecutions. Many high-profile executives were prosecuted and convicted of fraud, including Charles Keating, whose Lincoln Savings and Loan became one of the most infamous failures. Now it says the significance here is the S&L scandal highlights the dangers of inadequate oversight, excessive risk-taking, and regulatory gaps in the financial sector. It remains a cautionary tale about the balance between deregulation and the accountability in the banking industry. So, guys, here's to me, it seems that about every 20 years now, the financial system has been going through this. In the 80s, we had the savings and loan scandal. In the 2000s, we had banks start writing subprime loans, and it completely collapsed the system. And out of out of that collapse, that essentially was why Bitcoin was made. Bitcoin was born out of that financial crisis of the 2000s. But now, guys, we are seeing traditional finance merge with decentralized finance and Bitcoin. And again, close to 20 years after the 2000s, that whole scandal with the subprime mortgage, subprime lending and everything, we're nearly 20 years later, and we are facing the same dangers again, in my opinion. Now, again, I hope I'm wrong about this. But if on the chance, hopefully the small chance that I'm not wrong, there are things that you should be doing regardless to protect yourself and safeguard against this kind of fraud. And that is self-custody. So if you're not already self-custodying your cryptocurrency and your Bitcoin, please, 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 please do yourself a favor, do me a favor, do the entire crypto space a favor, and make sure that that happens. Get yourself off exchanges. Get yourself owning your own Bitcoin, not your keys, not your Bitcoin. Own yourself. Be your own self-sovereign nation. I personally, have several cold wallets, guys. And, the one that I really, really like the most and highly recommend, I find it the easiest one to use out of all of the wallets that I've used. This one is the easiest, the most user-friendly, and it's also one of the cheapest hardware wallets out there. So if you're needing a hardware wallet to get yourself into and start self-custody, I would say go over to Tangem and consider the Tangem wallet, guys. It's I don't get paid by these guys. They're not a sponsor of the channel or anything, but it's just a personal recommendation. You can obviously go with Ledger. You can go with, I do have a Ledger myself as well. I've got the Elipal Titan. You can do that. There are several options out there, guys, but this is just a recommendation. The Tangem wallet is really easy to use. And, it's cheap, it's secure. I've done a video on this. So go back and watch my video reviewing the Tangem wallet. If you're going to look into that one, but I would recommend you get it directly from them. Don't go onto Amazon or eBay and try and get a used one or something like that. You don't know if it's going to be tampered with, guys. So it's always important to get straight directly from the manufacturer. And their website is tangem.com for Tangem. Same would apply for the Elipal. The Engrave is another great wallet, a little more pricey on the side of pricey. Ledger, you want to get that directly from them. But if you guys do ultimately decide on the Tangem wallet, guys, it is about $50. And if you use this 10% off code that I have for you guys, that brings it down even more. So, very affordable, super easy to use. And at this point, guys, self-custody is more important than ever. So, like I said, do yourself a favor, do me a favor, get off exchanges and self-custody your crypto. Again, hopefully, I really, really hope that I'm just being paranoid here, but I'll end with this. If you, if this in fact is going to happen, this will probably happen after a lot of mania and a lot more adoption of crypto, because people aren't going to fail on just, JP Morgan Chase isn't going to fail on just a couple $100,000 worth of customer business into crypto, right? So this is going to take a lot of mainstream adoption of crypto, which I will cheer on, but at the same time, it will take that to actually go through this kind of fraud that I'm talking about with the deregulation. So ultimately, we're not there yet. I don't think selling your Bitcoin or your crypto at this point is at all warranted. This is me looking 20 miles down the road. Okay. So don't panic off anything I'm saying to you guys here. This is just a precaution that I would feel guilty if I wasn't bringing it to your awareness so you could watch out for these kinds of things. Not only that, but getting you away from the scams that are bound to be coming out at this point in the cycle. So again, guys, we've got a long way to go in this cycle. If you go by the 4-year cycle, we definitely have the majority of this year until we finally hit a cycle top. But if something like this does happen and we go completely hands off, deregulate everything in the crypto space, and this thing does kind of happen and we get a lot of fraud that way, let's say the ETF providers or the banks end up misallocating customers' funds and defrauding a lot of people. There are 2 things that you can expect with this. First, that crypto will suffer. The image of crypto will suffer, and crypto will be blamed by traditional finance for their own fraud. They'll blame it on the crypto industry. I can almost guarantee it. Okay. So that's the first thing. The second, that ultimately the everyday people, you and me, will pay the price for this. Either it'll be us being defrauded of our own money as customers of these banks, or ultimately the government will be printing out massive amounts of money again to bail out the traditional finance sector. So ultimately, guys, this is the irony of this whole thing. Even if this does play out in the worst possible way, Bitcoin and self-custody will always be the system of hope and the system that will save you. So there's my ending message, guys. That's the hope. Bitcoin is that hope. Eventually, full circle, we go through all this mess and Bitcoin ends up being the escape hatch from government bailouts and everything. So, keep those diamond hands on, guys. HODL and make yourself your own self-sovereign nation. Take control of your own stuff, And I will see you guys in the next video. Bye.